Hey folks, I hope I'm reaching to you in good shape. I hope you are doing great in your trading. I hope you are seeing some progress. So today's video is mostly going to focus on risk management. We can break risk management into three sections, but before we get there, uh, why is risk management important? There's no formula in risk management. Risk management is just a measurement in terms of your system mechanical failure, right? So let me put it in other words. You have your strategy that you believe in. So why would you implement risk management? Yes, you you just have to implement risk management just in case there is a mechanical failure of your system, right? That is why we wear things like seat belts just in case. um yes, failures do happen, especially in the markets. Yeah, so no matter how much you trust your your strategy, just give it a chance, to say, okay, if I didn't do well in this entry, at least let me have another chance to perform, because the point is to stay longer in the game, right? You don't need to risk all of your account in one set. So the first thing that you can implement is position sizing. Yes, once you have a different size, or if you size up differently, the first and foremost thing is to size up something that you can chew, just in case if things goes the other way, you have to be able to jump out, right? So that you don't let all uh, your account balance go in one set. I'm not saying use 1% or 2% risk management, whatever the case is. No, what I'm saying is risk management is relative to you, right? It's let's say you have an $100 account. You cannot. It's totally difficult or merely impossible to risk 1%, right, in a trade, unless you are using. But it's actually so difficult. But if you say, it starts by saying I'm risking 50% of my account, at least as long as you have another chance, right? That's all that matters. Trust your system, trust your strategy. Doesn't mean that you are going to enter all at once. Probably you might make, a slight mistake yourself. Yeah, mistakes happens. We might, make a mistake. We might not be able to see some of the things that we need to see in our strategy. So yeah, just in case, for any error, it can be human error or it can be system error, just try to protect your account. Doesn't matter what percentage you're using. The point is to protect your account for it to survive the next round, right? That's all that matters. You just need another chance uh to enter again. So for every entry that you make sure you put aside the capital to have another trade. That's basically it, you know. And let's say things goes bad, you don't need to be in a position whereby half of your account or maybe 3/4 of your account is gone. That now we are getting a little bit we are taking a step further, right, in not just risking 50% or not just, but now psychologically it's not okay again to lose 70% of your account. Although you implemented risk management, at least you left with something, but you are not making progress. So the key here is not necessarily to lose more for you to be proven wrong, right? So whenever you are entering, make sure you you set aside a certain amount, so that no, if I lose this, it really doesn't hit my account, and I'm still gonna have another chance to enter. So once you have that in place, you are guaranteed to stay longer in the markets. Once you stay longer in the markets, it means you have more chances to see your setup coming through. And by having those chances, which means you are likely profitable, or because your strategy and your management are working together, right? Yeah, they have to be in harmony which with each other, so that you yourself, you don't really get to be disrupted and just be all over. It serves you a lot. And then the second aspect is the use of stop loss. Yeah, stop loss is just a switch to say no. If I don't like this condition, switch it off, cut me out. All right. So it has to be at a good position where you say, if I reach here, I'm happy to be kicked out. I'm not going to discuss much about stop loss, because you know where you put your stop loss, and the markets will just execute your stop loss as it is. So give the markets uh, space to breathe, allow them to do whatever that they do, allow the price to fluctuate. But if it goes a certain area, no, I'm not interested. Here's my stop loss. Please cut me off. Give me peace. Wait for another opportunity to come through. All right. And then uh, the number three, which is the last risk management aspect, is try by all means to trade less. Right. Yes. Less entries, spending more time out of the markets. Trade when the markets are allowing you to. I'm sure you can relate with the video of over trading. Yeah, so trading less is a risk management. Why? There are two aspects in trading less. Remember, there's a commission and there's a spread. Whenever you're putting a trade, whenever you're entering this, there's a fee, right? And that fee can be managed by not entering the markets a lot. Okay. So once you manage your entries, you are already managing your risk. Try by all means not to be always exposed in the market. It's not healthy for yourself to just be always grinding, always stressed, always you know being messed up by how is the price moving. So staying out of the markets and trade less. I have no idea how you trade, but by all means try to eliminate unnecessary entries that will save your psychology, that will save your money as well. So try by all means to have clear entries. I'm sure I've discussed the clear strategy entries and all that in another video. Please check it out, where I was talking about the clarity of your strategy. Yeah, that will help you when it comes to risk and money management. Yeah, so I'm not just talking so that I make I make more content, but I try by all means all my content relate to each other. I am here to just put it in a way that you can be able to understand the concepts. There are no rules. You are the one who put the rules, and there is no formula unless you come up with your own formula. And please just follow it through, because money management is one of the cancerous activity that the markets can just devastate you. It's not nice for each and every trader for them to just have a drawdown that they cannot digest. So by all means try to stay safe, try to have a calculated risk, and keep it going, right? Trust your strategy. Don't give it all, give it a chance, right? If you have a small account, or very very small account, or if you have a big account, you guys are just the same. There is absolutely no difference. The one with the small account can just decide to say, okay, I am breaking this small account, for example $100, into only 3 entries, right? And on those 3 entries I am going to only enter when my strategy comes up. So if my setup comes through, I'm only, for example, risking $30, right? As I'm risking $30, then here comes the most important, the risk to reward ratio. It has to be more than 1:2. Yes, you can use any form of risk to reward ratio, but here is a key, right? Here is the key. Try by all means to stay up until 1:4, 1:5, even 1:7 risk to reward. That will save you. Let's say, for example, as I said, you have $100 account, and you say I'm only risking $30, and if you have a risk to reward of 1:3, you just made yourself, with one win, you just made yourself a good chunk of profit. That is almost $90. So the issue is risk, and at the same time make sure you give your reward a chance. You don't need to enter the markets and you be like, oh, I wish I stayed longer. Give it space, allow it to go to 1:5, 1:7. It's actually possible, but 1:1, it's doesn't really work with the risk that you have, especially if you have a small account. But we do things differently. If it does work for you, uh, keep doing it, and make sure you do it exceptionally well. And with that, guys, yeah, risk management is quite important. Try it by all means to have a good risk to reward ratio. That's one of the keys. And with that, folks, stay safe and enjoy your trading journey. um, yeah, just take it easy, keep it simple, and be the best. Thank you for watching. Until next time.